Will Coinbase suffer the same fate as some of the other crypto exchanges? I say no. Here's why.
I want money.
One is that, FTX is really, it's not representative of every company in crypto. Compared to Coinbase, for instance, we've taken a very different strategy. We're based here in the United States. We're regulated. We have a New York trust company. We have a license from the CFTC. We have money transmission licenses, and we went public. And so we have publicly available audited financial statements. We don't own a market maker business. We don't invest customer funds without their explicit direction. And so anyway, I think that's an important thing for people to realize in this environment is that
Coinbase is a publicly traded company. It is at $55. I remember buying Coinbase at its IPO, which was dumb at $340, but I'm still holding on to it. And I feel like this is a good opportunity in the stock market to buy some shares to this exchange and along with cryptocurrency. I'm not just pulling everybody's leg here because 90% of my stuff is on Coinbase, and I've been with Coinbase for a while. They're a company that has been around since 2012. FTX has only been around since 2019, hence kind of why it went out. I was just talking about this on a different podcast last night, that it's the Copernican theory. Things that have been around for a while tend to stay around for a longer period rather than something that's just up and coming. Look at the coins. Ethereum and Bitcoin are the ones that are 1 and 2. They are some of the oldest coins around. Am I right? I am right. So let's get a little bit more into analyticals as to why I feel like Coinbase is not susceptible to what happened to FTX. So this article on Seeking Alpha is saying that don't be thinking that Coinbase is a looming disaster. Coinbase is publicly traded, and this is much more, they're under much more scrutiny than a fly by the seat of their pants crypto exchange that it's the wild, wild west. There's no rules, no regulation, boom. It does not offer control of its own token, which is great because the exchanges, they don't need to be able to have these stable coins and be their own bank. The reason why banks stay around is they've got a stable coin, also known as the U.S. Treasury, with USD. They can keep printing more money and bail them out. FTX wasn't able to bail itself out no matter how much FTT it could print out. You're not supposed to be able to print your own money. Stable coins and crypto are not good because it's a Ponzi scheme. You can't have so many Peters to rob Paul if the market is going down and people are leaving. That's how they go under. And so Coinbase is under much more U.S. federal jurisdiction and state regulation. I absolutely agree with that. That's why I am for Coinbase. Am I biased? Absolutely. Let's look at some of their balance sheets on what they own. And do they have any money available? Well, right now they've got $5.6 billion in cash. They've got 368 billion. Yes, I was just saying in USDC. This is, I guess it is a stable coin that's pegged for the United States dollar. But the important thing is it's not like a CRO or a BNB with Binance, or Crypto.com, FTX. Coinbase does not have its own token. I will start being worried if Coinbase creates its own token as a stable coin. Custodial funds, it's 233 million. Corporate cash, 168 million. Held at third-party venues, $2.5 billion in corporate cash and 2.2 in money market fund. So they are fairly liquid there. Their revenue, right? Institutional revenue as far as transactions have been from $19.8 billion, and retail, they've made a lot of money on retail traders. They're giving the institutional guys that kind of seems a little bit messed up here. But anyway, their net revenue is $576 billion. This isn't a winner. So the revenue is going down, which is a little alarming for quarter 3 as opposed to quarter 3 a year ago and quarter 4 when Bitcoin was at the $70,000 range. The revenue, $210 billion. Operating expenses, percentage of revenue is only 18% this last quarter 3. That has been kind of declining over the year. They are at total operating expenses of $1.1 billion, which is down, which makes sense. Trading volume. This is important. Their trading volume is mainly institutional traders with $133 billion, where they've got retail guys have incredibly declined, meaning that I believe we are close to a bottom, and institutional traders tends to be a little bit more stable than the retail guys, just theoretically. So this to me is also incredibly good news for Coinbase. Let me know in the comments below if you're a Coinbase member. Do you think Coinbase could go under? Yeah, it can, but my number one alarm is going to be if they create a stable coin.